For the first time in a decade, the domestic non-life insurance segment in Singapore recorded an underwriting loss in 2019, and it's the subject of a just-released AM Best commentary. I'm John Weber for AM Best TV, and I'm speaking today to Director of Analytics, Doniella Pliss, and financial analyst, Trung Tran. And Doniella, there's been so much uncertainty, but how do you think Singapore's non-life insurers will weather the COVID-19 pandemic?
Despite the uncertainty, John, we expect the negative impact of COVID-19 on the claims to be relatively limited. On the medical side, the government covers the bulk of COVID-19 treatment expenses, and motor claims are actually expected to decline substantially due to lockdown measures and reduction in driving activity. The companies, however, may experience a drop in their top line as a result of extension for premium payments mandated by the government, and more importantly, inability to grow new business due to reduced economic activity and much lower consumer confidence. But in our view, the more significant impact will come from investment side. Lower interest rates, lower dividends, and decline in value of equity holdings will result in reduced investment income and potentially overall balance sheet contraction for the industry. However, majority of AM Best rated insurers in Singapore have solid balance sheets, and in our view, will be able to weather the pandemic, similar to getting through the financial crisis and H1N1 epidemic back in 2009-2010. Overall solvency and liquidity remain strong. In addition, many rated entities have strong parental support as well.
Trung, to what extent do you expect travel disruptions to hurt non-life carriers?
Yes, I think that the impact on travel insurance will be significant in 2020. So go back to history in 2009 and 2010, we see that travel insurance were badly affected because of the H1N1 outbreak, as well as the global recessions. So moving into 2020, in view of that unprecedented impact of COVID-19, we expect that the top line growth for travel insurance will be slumped even more significantly compared to what we have seen in the past. So in Singapore, what we see is that Singapore Airlines have cut its capacity by almost 96%. One of a very important airport terminal also suspended for 18 months. Many countries closed their borders, and we don't know when is it going to be open. So we expect that the demand for travel insurance to be very depressed at the moment. And even if the pandemic was over, even if the circuit breaker measure was removed, it will normally take about 6 to 8 months in order for tourism to pick up again. So that's why we expect the travel insurance to take a very long time to recover. And on the claim side, we expect that there will be a rise in the claims because of the large number of flight cancellation as well as cancellation in other travel related bookings. It will happen for a period of time, maybe by before April, because there is certain requirements for the notification period. Yep.
Trung, I had mentioned earlier that for the first time in a decade, the Singapore non-life insurance segment recorded an underwriting loss in 2019. What do you think the factors were that led to this result?
Yes, John. So even before 2019, we have seen a decline trend in the underwriting result for the whole market. And the key reason is because of the increase in loss ratio for motor insurance, as well as a very high loss ratio for health insurance. So what we have seen in motor insurance is that it's very hard to raise the price in motor insurance in Singapore, because the number of car sales in Singapore is very limited, given the restriction on vehicle license in Singapore. And even after the pandemic, we don't expect that trend to go down. The regulation will be even more tightened, and consumer confidence may also be weakened as well. So the prospect for motor insurance is also not good. On the other hand, the repairing costs continue to rise, and the competitions in motor insurance continue to be very intense in Singapore. We have seen in the very high loss ratio, which is more than the industry, the region average that we've seen in Southeast Asia. And the other factors is on health insurance, which has been loss-making for many years. Basically, the aging populations, high medical inflations, especially in the private sectors, as well as which is due to high doctor fees, more advanced treatment, as well as more expensive medicines. So those factors will continue to make health insurance to be a very challenging line of business. And so in addition to these persistent pressures, what we have seen in 2019 is also a surge in claims for marine business, as well as a property business. So for marine business, the loss ratio increased to more than 100%, and the paid loss for property business increased almost 50%. So all of these events has contributed to the underwriting loss in 2019.
Now, Doniella, for those watching who may not be familiar with Singapore's demographic or macroeconomic profile, could you explain those dynamics and how they affect insurers?
The Singapore population is aging fast, as Trung has already mentioned when he was talking about issues for medical carriers. The more recent situation with high number of COVID infections among foreign workers prompted the government to limit economic activity to prevent the spread of the disease. As such, the social distancing and subsequent circuit breaker measures in Singapore have resulted in significant reduction of economic activity and erosion of consumer confidence in the country. In the report issued just several days ago, the Singapore Central Bank estimated the full year 2020 economic contraction to be between 4% and 1%. That already takes into account the unprecedented amount of stimulus the government provided to both individuals and businesses. To put things in perspective, Singapore's worst recession thus far was during Asian financial crisis of 1998, when the economy contracted 2.2%. During the financial crisis of 2009, Singapore still achieved economic growth of 0.1%.
So where should we expect growth in Singapore's non-life market? Doniella, could you take that up?
Under such unfavorable circumstances that we just discussed, growth may be extremely challenging to achieve for the insurance industry, not only in 2020, but also in subsequent years as well. It is very likely that the industry will face reduction in premiums in multiple lines of business. The downturn in transportation, construction, and hospitality business will impact the motor, workers' compensation, and travel insurance quite materially. The actual outcome, however, will of course depend on how long that the lockdown will last, how fast the businesses will reopen, and the willingness of the consumer to resume the normal level of activity.
Doniella, Trung, thank you so much for taking the time to speak with us today. I was Director of Analytics, Doniella Pliss, and Financial Analyst, Trung Tran. You can find the full commentary online at ambest.com. For AM Best TV, I'm John Weber.